Good morning, I'm Peter Milios from the Finance News Network. US stocks declined on Wednesday following the Federal Reserve's decision to keep interest rates unchanged. However, Federal Reserve Chairman Jerome Powell mentioned that the central bank was unlikely to consider rate cuts in March, highlighting the need for more positive data on inflation. Still, the central bank did do something traders wanted, which is remove the part of the statement that signaled the central bank still had a tightening bias. The Fed removed a phrase that referred to additional policy firming. Treasury yields fell on the day following the Fed's statement, with the 10-year Treasury yields cracking 4%. Wednesday's session was markedly terrible for the major averages. It was the worst performance for the Dow since December. For the S&P 500, it was the worst day since September, and since October for the Nasdaq. Overall, the Dow Jones Industrial Average fell 0.82%, the S&P 500 fell 1.61%, and the Nasdaq Composite lost 2.23%. Shares of Alphabet dropped more than 6% and were on pace for their worst day since October 25, as disappointing ad revenue overshadowed better than expected earnings and sales. Peer tech names Microsoft and AMD slipped 1.5% and 1.8% respectively on lower than expected forward guidance after posting quarterly results. Shares of Boeing climbed nearly 6% following quarterly results that beat analyst estimates on both the top and bottom lines. The company has been plagued by recent issues tied to its 737 MAX 9, which has pushed Boeing to focus on safety moving forward. Turning to commodities, oil prices are poised to end their first monthly gains since September amidst heightened tensions between the US and Iran in the Middle East, with the West Texas crude falling 2.27% and Brent trading down 1.33%. Chinese investors and households turned to gold amid market volatility, boosting record prices and making China a key driver of global gold demand in 2023, according to UBS analysts and the World Gold Council. Meanwhile, Bank of America has reduced its lithium forecast, expressing concern that operators are prioritizing cost management over production cuts, leading to a 63.1% decrease in its 2024 spodumene price forecast to US $650 a ton and a 34% drop in its 2025 forecast to US $1,438 a ton. The US and European Union did not reach a trade deal for critical battery minerals, but they remain committed to pursuing negotiations aimed at establishing a transatlantic marketplace for minerals and other components. This agreement sought to enable European companies to benefit from US tax credits for electric vehicles, was a significant topic at the 5th ministerial meeting of the US-EU Trade and Technology Council. Turning to US sectors now, all sectors closed lower overnight. Communications fell the hardest, closing lower by almost 4%. Health recorded the fewest gains. Turning to the Australian landscape, the SPI futures are pointing to a 1.1% fall. Thank you for listening.